My first question to you this morning, you've done a ton of work trying to understand the potential for and the limits of coronavirus testing. Macro guy, coronavirus testing. Explain why.
Well, listen, when you talk to the public health experts, the minimum, it seems, that we need to be testing right now are 3 to 5 million people a day. And that's only if we include the pretty aggressive social contact tracing, i.e. someone gets it and all of a sudden you know who they've been in touch with. That's the kind of minimum we need to get people to feel safe. Otherwise, we're just going to have these things break out again. And so that's the bottom. And we're a really interesting place right now in that the virus, and the tragedies are coming lower, right? Or we've kind of peaked, and you can kind of look forward and say in a week or two, it's going to feel like the hospitals are mostly emptied, and we're all going to want to get back to work. And so the conservative people are saying, wait, we got to get this testing in place, and the more aggressive people are saying, just start. We need to start business. And that's going to be a real battle, I think, in the next 2 weeks that we need to watch policy-wise how it plays out to get cues for, I think longer-term market plays and even short-term market plays.
So Mike, as an investor, you have to make a bet, right? You have to decide for yourself who wins that debate. Is it the business people or the public health people? What do you think happens?
Well, what's so interesting is, as much as we're watching Donald Trump's press conferences, his long-winded press conferences every day, in a lot of ways, this is going to be a governor decision. And so I think some of the conservative or, red state governors are going to be more aggressive. Texas has already said they are. And I would bet California and New York are more conservative, listening more towards the scientists and saying, wait a minute, where we've come this far. We've had the worst loss of life in New York. Let's be extra careful that we don't screw this up. And so I think you're going to see a patchwork of setups. And I don't think that's in the long run ideal. I think it's what we're going to get. I also think you're going to see private business do their own testing. I mean, I got a bunch of the antibody tests recently. Unfortunately, I took them. We were all certain, my whole family was certain that we had been infected at one point. We had all had the flu, and it turns out that none of us were infected. And so, but it dawned on me, when you have these tests, you can test, 100 people for $20 a test, $2,000 a week. You could test your whole office if it's 100 people. People would know if they already had it, if they had it now. You could put your own testing regimes in to make people feel more comfortable coming to work. I've talked to a bunch of different CEOs who are already planning that themselves. And so we might see both, a public press on this, but also a private press.
What you're talking about is epidemiology, largely, right? And virology, I guess, as well. You have to think about the evolution of the virus and whether the testing that we're doing now, accurately gives us a sense of how many people have been infected. But fundamentally, you're talking about epidemiology. Is epidemiology, mastering the epidemiology, what determines success or failure as a macro investor right now?
I actually think this is literally more of a logistics game now. I think, you can read the American Enterprise Institute put out a report, Gottlieb put one out, the Center for Ethics at Harvard, Danielle Allen put one out. All the smart people are coming around the same idea. And so now it's literally logistics. How fast and efficiently can we build a testing apparatus in this country to give people confidence that they can go back to work safely?
Okay, you've done the work.
At bay.
You've done the work. How fast?
The people at Harvard, the Center for Ethics, they have been the most thorough that I've worked with, and they say you can't even start till June. So that's an extra month. But I don't think it's 4 months, right? I think the bid ask is we're going to start in 2 weeks or we're going to start in 6 weeks, and so in the long run for the market, in the short run that'll make a difference, but in the long run that won't make that big of a difference. And so I'm semi-confident that by midsummer we are back to some form of normalcy. Not normal in the same way. We're not going to be going to rock concerts, but we're going to be going to work. Our kids won't be going to school because it's the summer, but we'll be going to work. We'll be going to bars. There just won't be as many people in them. And life will look somewhat normal, probably like it looks in Hong Kong.
What kind of a hangover is there going to be for the economy, Mike, if if you're right, and by June, we're all going back to work, we're going to be in our offices, even if we're not going to rock concerts and bars, after having been shut for 3 months?
A big one. And this is the $64,000 question. Right? We've had the single largest economic destruction in any of our lifetimes, period, in the story. That's not debatable. And at the same time, we've had the single largest fiscal and monetary stimulus that any of us have seen in our lifetimes. And so trying to sort all this out, I think, being a trader is going to get harder. Up until even last week, if you could predict, hey, where the bed count or the ICU count or the death count was going to go, you could have some, edge on where the market was going to go. All of a sudden, that's not going to matter as much. And, we have earnings next week. There's going to be a fundamental story, a credit story. I think it leaves the market vulnerable. I think we're in a range. We probably have put the low in for the year because there was such panic selling, but we could easily retest the low. And the range could be relatively big. It could be 2,900 to 2,100, right? So that's a 35-40% range depending on which side you take it from. But I think it's going to get more difficult. Fundamentals are going to matter more, right? Beta's not all going to be one. And so companies that are going to survive might look good. Companies that are going to benefit from the stimulus will look good. But it's going to be a much more difficult environment, I think.
How's your macro book positioned right now?
I'm sorry?
How is your macro book positioned right now?
I got short Friday for the first time in a while, both stocks and credit, kind of selling into the Fed's last, big bazooka of buying high yield. It's not a structural position; it's a tactical position. I'll trade short for a while, but it was the first time I've really net been big short, since the lows. I also, I still am long gold. I'm long Bitcoin. We are seeing a monetization of debt like we have never seen in our lifetimes, and it's not just here in the U.S. Right, with the Fed buying everything. It's a global monetization, and to me, in the long run, that has to make hard assets look better. Gold has certainly been outperforming. Bitcoin's an interesting story. This is the time for Bitcoin. It got wiped out in the
Hang on a second. I've heard that before. I've heard this is the time for Bitcoin before. Why is this the time for? Why, if central banks around the world are embarking on a monetary debasement that dwarfs quantitative easing, why is Bitcoin at 6,700 and not at 25,000?
You got to still remember it's an 11-year-old experiment, and it's only in the last year where it really has become a macro weapon, an investment choice. And I'm seeing, literally in the last month, hedge funds and high net worth individuals who had never bought it before who are buying it. And so it's no longer a question of explain it to me. How does it work? What does this mean? It's like, okay, I'm going to take a risk. Listen, the risk on any store of value, if it's gold, is that enough people believe in it. And so it's still a question of adoption. I'm just seeing more adoption here in the U.S. and in Europe than I have literally since I started this. Why is it down? Listen, Asian retail is still a big part of this. The Chinese economy is getting hit. There's a lot of leverage in the system in the Asian retail side of crypto, and so there are still sellers coming out of Asia. The China-U.S. relation and the China-European relationships are going to be relooked at in lots of ways as the dust settles in this thing. And so I think the heaviness that we see even overnight, right, Bitcoin is down 500 points, is mostly coming out of Asia. And so it's something we're looking into. But the positive side is I literally see new players coming in every day.
What?
And, we have the halving coming up. Bitcoin is a instrument with no inflation or with very little inflation, and the inflation rate is getting cut in half right as the Fed is saying, we'll print as many dollars as you can want.
Before I run out of time, Mike, among your fellow investors, many of whom I know you admire, who do you think has traded this pandemic, this crisis, if you will, this recession, market collapse we saw in March most brilliantly?
Listen, I haven't been speaking to him, but just looking at the returns, Alan Howard at Brevin Howard, he always seems to, have the book position for the crises. And, sure enough, he pulled it off again. So, he's up 25% on a large amount of capital. Alan is a smart guy. He buys risk premium or shorts, when it's trading very, very low. And so he has done well. Interesting that the whole hedge fund business, the macro business has done very, very well in general. And even the multi-strats, right? If it's Millennium or if it's, Ken Griffin at Citadel, all up on the year. And so I think the Fed really helped bail a lot of people out on the multi-strat side. I think macro guys got onto this relatively well. And so it's one of the few times in one of these crises where you can say, hey, the hedge fund industry really, did okay.